what is going on, everybody? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be going over fundamentals, talking about the most recent price action activity in the digital asset ecosystem, talking about what to potentially expect this week, but at the same time, keeping you guys forward looking into the future, where we are on the precipice of experiencing mass adoption in this digital asset ecosystem, massive developments happening behind the scenes that the mainstream media is not going to inform you about. So with that being said, if you all enjoy these video breakdowns, do me a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. We're going to start here on this post today where I said, don't get shaken out. BCB Group is Europe's leading payment service provider for the digital asset economy, and the CEO of BCB Group goes on to estimate in this panel discussion that the total cryptocurrency market cap within the next year will be roughly around $9.5 trillion, and keeps the audience forward looking as he goes on to say it's going to be a bit bumpy on the way up. Take a second and listen.
For me, out of 10, 6 to 12 month scale, I think a solid 9.5, and I don't think that's priced into the markets yet. And I say that not to diminish the trauma that we've faced in so many ways, markets up and down, companies coming and going, but in the fact that despite the relentless near-death experience, Celsius 3 Arrows, Terra Luna, FTX, Silvergate Signature, we're here, and every monster we slay makes it easier to slay the next one. So I'm very positive about the direction because it is clear, I hope, to everyone here that this is a one-way street, that the upgrade of money and economy and how we do things is one way, but it's a little bumpy on the way. But I'm encouraged that we're here, and that I'm very positive about the direction because it is clear, I hope, to everyone here that this is a one-way street, that the upgrade of money and economy and how we do things is one way, but it's a little bumpy on the way.
Now, the reason why I'm showing you all this video today is because of fundamental pieces like this and the ones that we're putting out here for you all at CYPRX, where just a couple of hours ago, Cointelegraph actually put out a really great article talking about CPI this week, where it says, this week is as good a time as any for crypto market volatility. United States macro data will combine with commentary from Jerome Powell, the chair of the Federal Reserve, in what could prove to be an explosive mix for risk assets. So I said to you guys yesterday, before this fundamental piece from Cointelegraph came out, what you should be paying attention to this week for risk assets. This week, make or break for risk assets. Will we see higher inflation equaling to stronger dollar, which would be bad for risk assets and create a risk-off market environment? Let's hope we see the opposite. So let's just jump into this fundamental outlook. We're going to go into the total cryptocurrency market cap. I'm going to be giving you all some levels to be paying attention to in case we do see a further market downturn in the digital asset space. And then I'm going to leave you all with some supporting fundamentals, zooming out to get you to see the long-term perspective is still bullish in this digital asset ecosystem. So what should we be paying attention to this week? Well, first, we need to understand what happened last week. Last week, the digital asset space continued to face selling pressure, resulting in a 7.7% decrease in the total cryptocurrency market cap. Now, this was largely driven by hawkish remarks from several Federal Reserve speakers, indicating that the Fed is in no position to cut rates and intends to maintain higher rates for a longer period of time to control inflation, which remains stubborn and problematic in the United States. Now, to close the week off, inflation expectations actually rose from 3.2% previous readings to 3.5%, which strengthened the dollar and dampened risk assets. This week holds significant importance as well, with various Fed speakers scheduled throughout the week, along with key U.S. data releases such as the Empire State Manufacturing Index, retail sales, labor market indicators, including unemployment claims, and of utmost importance, the inflationary figures with the Producer Price Index, i.e. the PPI, and the Consumer Price Index, the CPI data, that's set to be released on Tuesday and Wednesday this week. Right? So let's talk about the two different scenarios that could possibly play out this week, given the data that's on the forefront. Well, for a recovery in risk assets and bullish momentum in crypto, we would ideally need to see one-sided volatility and dollar weakness driven by lower or moderating figures in both PPI and CPI data, This should also be coupled with insights from Jerome Powell indicating that rate cuts are still possible if inflation decreases, alongside subdued U.S. economic activity supported by downbeat data like higher unemployment claims. Such a scenario would most likely prompt sell pressure on the dollar and increase investor appetite for risk assets. So, for example, just looking at Forex Factory, you guys can see all the data that's set to come out this week. You can go check that out yourself. We cover this intraday in the CYPRX private community, where every single evening during Asia session, I give the private community members a macro breakdown and I talk about the potential price setups during the next trading session that could unfold given how the data comes out the next day. But let's just take a second and pay attention to scenario number one in this fundamental report that I mentioned to you all, which would be if we actually see a positive outcome this week. That means downbeat US economic data, dovish comments from Federal Reserve speakers, and lower inflation readings. The question becomes, will we hold this $2.15 trillion support on the total cryptocurrency market cap, where you can see this is on the weekly chart. We have respected this area of interest multiple times given 2024's time frame this year. So far, since pretty much February of this year, we have respectively held the $2.15 trillion mark and failed to break significantly below it. So in my personal opinion, if we see a positive outcome this week, given the scenario that I mentioned to you all that would be more favorable for risk assets, we are most likely going to continue to consolidate around this area or break higher, respecting the 2.15 trillion, failing to break lower, and we're going to start to see a correction of this previous bearish move that was predominantly caused in the middle of March by higher inflation. Leading into April, we saw continued higher inflation, upbeat US economic data, and then with this candlestick here in the middle of April, we saw the geopolitical escalations and tensions in the Middle East drive more of a demand for safe haven in the United States dollar and less of a demand for risk assets. So on the weekly time frame, if we can hold above the $2.15 trillion mark, and we can see a positive risk on market sentiment driven by downbeat fundamental data that weighs on the United States dollar, outflow of dollar, inflow into risk assets. This is my weekly prediction and what I would primarily like to see along with the rest of you in the digital asset space. Right? But we have to be cognizant and we have to be aware of the potential polar opposite, which could unfold. So conversely, I wrote to you all in this fundamental piece, we must prepare for further market downturns if the dollar strength persists. And I know that people don't want to hear this, but it is the reality of the markets, which I'm going to get into in today's video breakdown, is not a bad thing. If you understand fundamentals and you understand the developments that are happening behind the scenes are actually extremely bullish long term, keeping in mind that individuals with a lot more credentials are telling you all that it's going to be a bit bumpy on the way to the upside, right? So don't be fearful, don't get shaken out. So let's go over the secondary scenario, the scenario that we would all not like to see. So we must prepare for a further market downturn if dollar strength persists. This would be driven by higher inflation figures in both CPI and PPI, along with the upbeat US economic data, hawkish Fed comments, delaying rate cut expectations, and positive labor market figures such as lower unemployment claims, signaling that more people are employed in the United States and the labor market is relatively healthy. This would likely result in a further correction in the total cryptocurrency market. So let's stay reactive and remain adaptable to changing market conditions. So let's say the second scenario plays out this week where we see upbeat US data all across the board, higher inflation, and hawkish Fed comments. Again, all of those fundamental factors will be covered in our evening Zoom calls here in the private CyPrX community for our private members. But let's just look at the total cryptocurrency market cap and address some key psychological levels. So if we do break that $2.15 trillion mark, keep in mind, in my personal opinion, it's still healthy to see a correction via the previous bullish expansion that we saw as we came into the beginning of 2024. This is roughly around the end of January, and we expanded all the way up into $2.7 trillion. So even if we did see the market have another downturn and the total cryptocurrency market cap breaking lower into possibly $2 trillion or even $1.8 trillion, if we take our fib extension, which again is a tool that measures discounted and premium price, and we take it from the low of this area of interest to the high that was made in 2024, you can see that the 50% correction from this previous bullish move is roughly around where we are right now, $2.15 trillion. At around $2 trillion, that would be a 62% correction of this previous bullish move. And a $1.8 trillion total cryptocurrency market cap, in my personal opinion, would be a black swan event or a most, the worst situation, right? The worst situation, $1.8 trillion would be roughly about 79% discount. So again, zooming out, understanding that these corrections, in order to create bullish order flow on the higher time frame, remember the weekly, when we zoom out and we look back, if we do see a correction down into these areas due to the fundamental factors that I just mentioned, it's not going to be a bad thing, right? This is healthy price action. A correction from a previous bullish move, profit taking place, re-implementation and reallocation of capital down at discounted prices for higher prices in the future, right? So zoom out. Remember that the things that we're experiencing in the market right now on the macro scale are all temporary. They're just hiccups. Okay, let me show you exactly what I'm talking about. Everybody in the market wants to talk about the fearfulness of the digital asset space when we're in a market downturn, and nobody wants to talk about the positive ongoing developments. So let me show you some of those things being mentioned behind the scenes that, again, are never going to be brought to the mainstream. This was a very interesting read. This is from Steakhouse Financial. Steakhouse Financial is a crypto native financial advisory for DAOs, building the financial and economic infrastructure for thriving decentralized communities. So I thought that I'd share this fundamental piece with you all, where in a PDF, they go on to say, and talk about the overview of the BUDL, I don't know how to pronounce that, BlackRock USD Institutional Digital Liquidity Fund, right? And look what they say right here. BlackRock's foray into public blockchains with BUDL, hopefully I'm pronouncing that right, isn't merely an expansion of their product line. It is a bold endorsement of blockchain technology by the financial establishment, signaling a new era of institutional investment in public blockchains. How many times have we told you all we are literally in a new digital era? We've tried to show you all. Now, this highlights the readiness and growing interest of institutions to engage with public blockchains, navigate the changing regulatory environment, and explore possibilities within the DeFi ecosystem. DeFi is not going away. Crypto is not going away. It is only going to expand and get bigger. These market downturns that we are experiencing and could possibly experience further this week are all temporary. And when you understand that, you will stop being fearful and you will pay attention to educating yourself about this space, which is why it's important to hop on the CYPRX space and read our fundamental posts so you guys can actually see what's happening and not just think, oh my gosh, I put $1,000 into this market last week and now it's only worth $700. Oh my gosh, crypto's a scam. Let me get out. You're going to be one of those people that gets shaken out because you don't see the long-term perspective. Let me show you all something else that I found was very interesting. I hold a lot of Casper and I'm a firm supporter of Casper Labs and what it is that they're attempting to achieve long-term. Here you can see just 2 days left until the Actis conference. Don't miss out, right? What is the Actis conference? Well, you guys can jump a little bit into that. Now, check this out. Who's going to be at this conference? That's the important part because it literally devils in the details. This technology is not going anywhere. You have members of the DTCC. I know that you guys can't really see because the print is very fine and small, but you also have members of the European Central Bank attending this event. You also have members of the Federal Housing Finance Board. And then down here, you see members from Morgan Stanley, right? And then right here, who do you see attending? Casper Association. And what are they talking about? They're talking about DeFi innovation that advances finance and inclusion. Again, this is coming up the 15th of May. Now, let's just go take a look at Actis. Why would they have Casper, right, at their events if they weren't going to be part of this new financial ecosystem, right? It only makes sense. So if we go to the Actis website, this is the last thing that I have to show you all. And we scroll right down here, just look at the board of governors. We have a former chairman of the Federal Housing Finance Board and co-leader of the committee to establish the National Institute of Finance. I would say he's a pretty important person with a lot more credentials, right? And they're going to be sitting on panel discussions with Casper Labs. We have individuals from Morgan Stanley down here. We have former members of Citibank and former members of the Federal Reserve Bank of New York, right? This is not some random willy-nilly organization. This is put together by a group of systemically or previously systemically important people, and you see whom they are sitting on panel discussions with. It is not hard to see this information, but again, the mainstream CNN is never going to go out and tell you guys that this is happening behind the scenes, that reports are being put out like this. keeping you all hopeful and forward looking in the digital asset ecosystem. They're going to constantly pump fear in your face to try and shake you out of this market. But the people that know, the people that understand where this market is headed long term and understand that this recent market downturn that we're experiencing is just going to be a blip, a little tiny blip as you zoom out on the monthly and quarterly and annually chart on the digital asset space, right? So keep all of that information in mind as we head into this week. Given my price targets and projections via the total cryptocurrency market cap, again, if we do experience a market downturn in the digital asset ecosystem, we here in the private CYPRX community will be looking at that as a discounted opportunity to better situate ourselves in some better long-term bagged positions. As always, many blessings to you guys. Be cognizant, be aware out there, stay safe. None of this is financial advice. I'm not telling you guys to go out there and buy digital assets or get involved in cryptocurrency. Obviously, of course, assess your risk accordingly. And with that being said, I will see you all in the next video breakdown.